Hello, everyone out there. Thank you for joining us. This is Andrew Berman for another leadership outlook, a mortgage leadership outlook. Thank you so much for joining us. We've been doing these for, I think, our third week of presenting some of the biggest names, the biggest leaders in the mortgage industry. So first off, if you're here, if you've joined us, thank you so much. Before we get started, please take this and share this. Let other people know, that you've joined us for this. We're going to have Gary Malis is going to be joining us. He's over there. He's going to join us in just a few seconds. But let's make sure that we have enough people in the room to get Gary excited about this. So please, use the share button. You'll see that in Facebook. You'll be able to take this and share this, invite other people, get other people involved in here. And without any further ado, I'm going to bring in the legendary Gary Malis. Gary, thank you so much for joining us. So, Gary, if you don't know Gary is a chief strategy and capital markets over at PRMG. Gary, thanks for joining us.
Happy to be here, and I just want to say, if you wanted a big group, you probably should have gotten someone more esteemed than myself. But hey, what the heck? You can with what you got.
Like maybe Sandy Levine. How about that? So, if those of you that don't know, there's a great show. Which really, I have to say, like, the Plot Against America is phenomenal. I hope you don't mind me talking and going a little personal on you. But Gary's son, Caleb, right?
Yes.
Is the star in the Plot Against America, which is an HBO series that just came on that is phenomenal. Really, it's so impressive. Now we're going to get to the business side of it, but as people are loading in, I figured let's talk a little bit about actually, the celebrity side of the Malis family. So talk to us actually, is this actually Caleb's first acting gig? Has he done anything major like this before?
Yeah, if you really want to talk about this, we can talk about it, but I don't want people thinking I got on here to pimp out my son.
I did. No, I put you on here.
No, he's been acting and doing musical theater and all kinds of things since he was 7 years old. He goes to performing arts school. But this is, when they say newcomer, it's a newcomer. He came out of nowhere. He essentially did a self-audition tape for a national show. And HBO called him on a Monday and said, be in New York by Wednesday. And he started filming on Friday and was there in New York for 6 months. It was quite the thing. My wife and I rotated between going back and forth in New York for 6 months. And he lived in an apartment in Hell's Kitchen, paid for by HBO. And he had a blast. And the show's doing really well. It's interesting, people are so used to streaming now that we know a lot of people that will text me and say, I haven't watched it yet. I'm waiting for all 6 shows to drop. HBO doesn't drop. HBO goes once a week. They like it that way. That's how they do things. So they're through episode 4. Personally speaking, episode 4 is our favorite, at least for me. It's where I think Caleb gets to do the most exciting things in terms of performance. But and he stays in touch with the cast. The cast was awesome. It's the same, it's the same group that did The Wire. So, Dave Simon, Ed Burns they're geniuses and they do tremendous work. And, politically, there's some that are going to say, well, there's some things about it they don't love, but it's a thought-provoking show that does some cool things. And it's really well done. And we're super happy that he's a part of it.
Yeah, listen, I'm just going to be frank. I'm not so happy with his behavior, what he's doing actually in episode 4. I was a little disappointed. I liked where he was going, but all right. I thank you for sharing that and allowing me to indulge a little bit. So listen, I saw actually your broadcast with Anthony for the BRB movement, and it was great. A lot of the things we're going to be covering there, you covered there, but let's take it back to some of the basics here, because I had a conversation like yesterday afternoon with an originator, top producing originator, frankly. They do not understand actually, the process of what happens with a mortgage after it closes. So let's actually start from a basic level, because I think this is important for all originators that are just new into the business, that maybe don't understand, and also and maybe in a way actually that you can explain it so that an originator who understands what happens might be able to explain it to their borrowers, because it's important that we have these conversations, especially as servicers now have this burden of the forbearance. So talk to us about the life of a loan, after it closes.
Yeah, I mean, I'd say that, the easiest way, and I try to draw some analogies, and I think you saw them in my other show. Sometimes I do some crazy analogies, so I'll try to sometimes make it a little. Did I disappear?
No, sorry about that. Okay. I meant to do this.
Oh, okay. So when you think about it, as a lender, if you lend $100, right? It's not like if I gave you $100, I'd give you $100. But when you lend money, it's a little more complicated, because when you lend $100, you have to think of it as the $100 being broken essentially into two components, right? There is a portion of the $100 that someone is then in charge of for taking payments. So let's say I lent you $100 and you agreed you'd pay me back $1 a month for 100 months, right? So of that $100, you would then take a portion of that and say, collect this money. And so that's when people talk about servicing, and they talk about this liquidity issue for servicing and the forbearance for all and the challenge that comes with servicing. But aside from the servicing strip, there's just where the majority of the $100 goes. And for the majority of loans, when people think of Fannie, Freddie, and Ginnie, these loans go into securitizations. Banks don't just sit there and hold the money. Like these banks, even banks don't have unlimited capital. And so what's happening is right now, everyone's been talking about liquidity, but for originators to understand, when we fund a loan, the question is two pieces. Where are we going to sell the asset, and where are we going to sell the servicing piece? And even if you keep the servicing piece, 99 times out of 100, you are selling the asset. And in most cases, you're selling it when you know of a conforming loan, you're selling it to Fannie or Freddie. And if it's a government loan, you're being a Ginnie issuer. And so what has really caused some of this gridlock to some degree is forget about all the complications with forbearance for all and all the questions it comes with in terms of cash advances and all kinds of things we can talk about for quite a bit if we wanted to. The most immediate gridlock issue, and there's a lot of talk about some aggregators saying, hey, even if we buy a loan, we're going to buy it, but we reserve the right to make you repurchase it if a customer asks for forbearance. And so the challenge is, and just to draw a timeline, so let's say a broker or loan officer, anybody does a loan, and let's say a company like PRMG funds it on a Friday, and we do our best to make sure they qualify. Let's say we do the verbal verification even on that Friday. We've done everything we can to make sure it's eligible for Fannie or Freddie or Ginnie security. Let's say on Monday, the customer calls and says, you know what? I know you called me on Friday, but this forbearance doesn't say I had to lose my job. It doesn't say I have to do anything. It just says I have to ask. And so if they have to ask, and that's all the test is, so then what happens is, forget about the servicing piece. The first initial gridlock question is, well, can you sell that asset? Which means of that $100, forget about the 1%. That's the servicing strip. You have $99 on the table that if you can't sell, you're sitting there with $100 that you presume you were going to sell to the agencies and then move on to the next $100 loan. And so you don't have the ability to hold these loans in transit for a long period of time. And so what's happened is, because the language in the Fannie Freddie piece, which again, we don't believe it was deliberate, we don't believe it was meant to be harmful, we don't believe it was even meant to cause gridlock, but because it's written in a certain way and it says you can't be in forbearance and send us a loan, the question of in forbearance has not been adequately addressed. Because when does forbearance begin? I mean, here, let's start with the most basic technical issue. It's a Fannie and Freddie forbearance program. If you can't sell the asset to them, then in theory, how can you even give them forbearance? It's not their program. And if it is their program, then they have to take the asset. And so it becomes this chicken or egg argument. And so when you saw last week, these aggregators saying, hey, wait a sec, even if we buy the loan, we're not sure we're not going to make you buy it back. Which then, going back to the initial point, gets even more complicated, because almost every lender, when they fund a loan, talking about your timeline, once a loan funds, most people put it on a warehouse line, some kind of repo facility, and basically they're borrowing 98% of 100, let's say. And then when they sell that asset, they get replenished. If you sell the loan to an aggregator and then they buy it and then they issue a repurchase, you don't have a warehouse line anymore, which means you don't now finance 98%, you finance 0. And so it turns into a cash transaction. So what's happening is everyone's afraid of this cash crunch, because until the GSEs make this more clear, which we do believe they will. The MBA, Bob, Pete, and that whole group, they've worked their behinds off 24 hours a day to get the agencies to clarify this. And there's some schools of thought that say there's nothing to clarify. They don't mean that you can't deliver loan to the agencies. They mean if you're sitting there for months and months, let's say I bought your loan 3 months ago and I let you go into forbearance and I never bothered to put it into security, they're saying, well, now you can't give it to us because they're already late. But because Fannie and Freddie don't use dates and timelines, they just use verbiage. verbiage, as you know, is subject to translations.
Mhm.
And people are using different interpretations. And so it's creating gridlock because everyone is unsure what it really means. And the reality is nobody can fund a bunch of loans for an originator and be in a position to not put them into the GSEs. It's just, it would put cash to a stall. And so that's why you're seeing, and so that's even more important, not say more, it's hard to say what's more important right now in this environment, but it's certainly equally as important as the servicing strip and forbearance and the cash advances and what comes with that. So you have two different pieces, aside from all the other challenges in pricing an asset and all the other challenges that come with figuring out what the right value of an asset is. But that's the most immediate piece that we're anxious to work with the MBA and everybody else in the FHFA to clarify that piece. I know that's a long answer, but that's as short as I can do to try to make it kind of simple, but yet advanced enough for people to say it's a quality answer.
So, well, I mean, would we have been in a better situation? Like, and we look actually in a, I know it's hard to use 2008 as a comparison because it's so different. But in 2008, the government didn't do anything, like, and they were slow to respond. So would we have been in a better place, if they were slower to respond? Like is there been any benefit from a quick response, even if it has unfortunately unintended consequences?
Yeah, I mean, look, that's a tough question because obviously, look, in a time like this, the government's job is certainly to help consumers and do the best they can. If you talk to experts, I don't know if Dave Stevens has been on this show. He's been on a ton of shows and he speaks so well. Barry Habib's been out there. I mean, you have people that do a much better job than this than I do because they're literally professional speakers. I'm a professional hider. And you got me on the show twice. The last time I almost died and had to go to the hospital.
This is a fact. Actually, that's
like. I even got back on. I think I should get points for. But but to your question, it's interesting because do they have an obligation to help the consumers? Of course they do. Did they paint it with too wide of a brush by making it forbearance for all and not proving some kind of hardship? Yeah. What happens when you do that? And this is the challenge with it is. It's one thing to say, look, there's going to be job loss. We know it. I mean, look at the unemployment numbers now. It's now already past 10%. It's going to be 15. It could get to 20. But it happens slowly. It happens over time. Some people have reserves, which means there are people that would need assistance, but it would have bled out over time, a year and a half, 2 years. By shrinking this window to saying, call on Monday and have no reason, don't even have a job loss, don't even be out of money, what it did is it created such a short window that it's almost impossible to even forecast what's going to happen. Because you can't logically say, well, I can predict job loss, and so I can figure out what my forbearance rate will be. Since they didn't put a requirement on it, you can't even hazard to guess what the forbearance rate will be. And so you have people thinking, well, they won't ask if they don't need it. And the question is, well, how do you know they won't ask if they don't need it, right? That's a big leap of faith. And so is it good that they did something? Of course they did. No different than the Fed when they came in and tried to stabilize mortgage-backed securities by buying. But did they need to buy 40 billion? Probably not. And so in both cases, it's well-intended. Yeah. They didn't quite think through the insiders from a standpoint of cramming through, and you've seen people like Barry Habib talk about this, even when rates drop, when people say, we could do $7 trillion of business this year. Well, no, we can't. We can't. Physically, there's a capacity issue. And so anytime when people say there's no such thing as it's too much of a good thing, right? No, there is. There is too much of a good thing. And free forbearance for all is a challenge. But does that mean there shouldn't be forbearance? Of course there should be. Should there be an intelligent way for the Fed and for the GSEs and for the servicers and for the banks to work together to help the consumer in a time of need? Of course there should be. But there has to be an intelligent way to model it out, because if you can't model something, you can't manage to it. And if you can't, no one has unlimited cash. That's the bottom line. And to behave as if people do and to suggest that they're calling too soon and crying out. Well, when is the right time to cry out? After you're out of money? Like, you cry out the first time you say, I can't model this, which means I can't put a price on an asset. And if I can't put a price on an asset, I can't reasonably deploy any capital, because now I have to save my capital for this because I don't know how much it is. So I'll pretend it's unlimited. So they're creating gridlock. And I don't think it's on purpose. Like, it's not my style to think these conspiracy theorists that they're trying to make independent mortgage banks kind of drive their way into the banks. I just don't think they thought it through. I think they were trying to act super quickly, which is noble in many respects. Yeah. But they have to, in a perfect world, they'd walk it back. at least get it back to a pinpointed control that says you need to prove hardship. It's normal. When you go to a bankruptcy court, you get undressed by a judge. You get literally undressed and you get emasculated. And they say, how did you end up in this spot? And at the very least, it forces people to go beyond the honor system, which when you're talking about fiscal responsibility, the honor system isn't really enough.
Yeah, it's all valid points. Listen, we look actually when last time when we allowed the servicers to kind of come up with their own rules. We saw what happened, and we saw actually they literally had to create events like the Hope Now Alliance had events where you were able to go and meet your servicer face to face because their call centers couldn't handle the volume. So it was well intended to say, okay, let's actually kind of eliminate that, but without actually thinking of the worst case scenario. And so let's. If you don't mind, let's explore that worst case scenario because I think it's important that people understand it, because I feel actually knowing that worst case scenario might get people to understand why they should be vocal, talking about, who should be going for this forbearance, what information, what they need to know actually in terms of the different types of forbearance options there. But let's play actually that doomsday worst case scenario. No facility was available, and everyone goes for a forbearance. Not everyone, but a large number. What does the mortgage market look like at that point?
Yeah, and it's a good look. I mean, you never want to start saying doomsday scenarios, because then people start printing those kind of headlines and so forth, right? And that's part of the challenge is people do these interviews and they talk for 30, 40 minutes, and someone takes one line out of the interview and says one thing and paints everybody as either a villain or kind of a silly optimist. And the truth is, neither is the right tone at this time. Yeah. And so, look, the analogy I give, again, I do my analogies, but I can go back to my high school years when it sounds like a silly analogy and maybe it'll help people. It's, again, when everybody wants something at once, it's just by definition, it becomes a problem. And so I ran cross country in high school, and there's a very popular race back where I grew up, and you'd have 70 teams, and about 200 yards away, there was a fence that was 10 feet wide. And so if you didn't make it to the fence first, by definition, you couldn't win a 3-mile race because you'd be so far behind because you had to wait for everybody else. And so the person that won was not the best miler. The person that won wasn't the best racer. The person that won was just the person that found a way to scratch and crawl and finish first. But you left a whole lot of people behind that were actually more qualified as the loser. And so the challenge with this is when you do forbearance for all at once, and you have and you think people have unlimited capital and capacity, the truth is we may help the people that don't need it as much. The people that need it the most may not get the help. At some point, you live in a world where these companies run out of cash, and then they say, look, what do? You go back into receivership, you transfer to another servicer, you say, well, let's transfer to a bigger, more credible servicer. No servicer has unlimited capital. So what happens? Theoretically, this could all end up back in the government hands, which would be a horrible situation, because there's a reason why the business world has used sub-servicers and independent mortgage bankers, because for the last 10 years, they've been helping grow and stabilize the mortgage industry and, quite frankly, stabilizing the housing industry. And it's been a big part of the economic recovery. But it's the worst case scenario is just making the assumption that everybody asks for forbearance, not understanding what it means. And the truth is, it's not so entirely clear what forbearance means. There's different kinds of forbearance. There's different lengths of period. And so when you paint it with such a wide brush, it's just hard to know, because if other people do it and you say, well, gee, let me get this straight. I can skip payments for a few months and they'll cap it to my end of my loan. And yes, when I sell the loan, obviously later, I'll repay it. But it's still a very cheap loan by all practical purposes. Yep. And so if someone wants cash flow, it is a way to do it. Now, there's some questions as to whether that impedes their ability to get a refinance down the road, will impact their credit. There's some tricky things that come into play, and there's some scripts you have to follow. But the truth is, not everybody needs it. And we do have limited capacity, and every model is built in a certain way that expects default. Every responsible servicer has built intelligent, well thought out prepayment risk for interest rates dropping or increasing, for delinquency, for default management, and they've predicted a certain number. But there's no one in the world that would have predicted forbearance for all. And so when people talk even about a hedge, People say, well, did you hedge against this? Well, you can't hedge for something that is intervention. And so we have to be careful. We talk about free markets, say, well, let the market sort itself out. But the forbearance for all wasn't a free market decision. Yeah. And so the problem is once you begin in intervention, then you have to see it through. And you have to see intervention through in a way that lets us all help each other, because no one was staffed for intervention of this magnitude with no notice. It's just a mathematical impossibility. And again, it's a model that nobody can really play out very well.
Interesting. So an analogy that just popped in my head, it's like toilet paper. Not everyone, like there's an unbelievable run on toilet paper, and it's not that that people need cases and cases of toilet paper, but it's there. They feel like, why not get it? And because of that, it's created a situation where a lot of people have a shortage of toilet paper. So
yes, and yep. Yes, and it keeps on giving, because once someone starts hoarding, if I see you hoarding, then I think it's a good idea, and I start hoarding, because then so the hoarding becomes essentially a bank run mentality. And so the biggest risk with forbearance for all is it becomes kind of a bank run mentality. If everyone believes that their credit will not be impaired, which again, done responsibly, it's certainly reasons to say why we shouldn't impair it, right? But if you believe that it's going to be an interest-free or very low-cost loan, and in the end you can sell the house later with no financial impact or negative financial impact, and you can essentially be in a credit position to still purchase anything you want moving forward, the truth is, why wouldn't people do it, yeah. Right? Now, I think if you look at so far the early numbers, people will say that people are confusing forbearance with forgiveness, and that's another concern is, do they even know what they're doing? And we say that we don't mean that because they're not intelligent. We mean because is the best information being given to them? And that's the other problem is when you're getting a flood of calls, can you intelligently and adequately take the time to explain to each person what is being done in an intelligent fashion? And that they understand. I mean, the majority of people, their home is by far their biggest both asset and their biggest liability. And so it's not something to be rushed or taken lightly. And you're getting such a large flood of phone calls and probably some misinformation. And unfortunately, the hardest thing for the banking community, I suspect, is if you're trying to do the right thing and staffing up and handle this, the one person that's on a call, for an hour, 2 hours, that lost their job is going to go to the paper and say, this lender did not help me in my time of need. And it's like, it's not that they don't want to, it's to your example. It's because someone else is taking a whole bunch of toilet paper in front of them, and some of them may not even needed it, but we can't get to everybody. And so it also creates some undue headline risk, which is unfair because, as you know, after 2007, the banking community has worked very hard to repair what is some, look, we get into all kinds of theories as to who's to blame and this or that, but it's clearly some self-inflicted wounds. There's nothing to debate there. And so the industry has spent a great number of years trying to work with the community, with the consumers, try to change kind of the environment. And in this one is completely unfair to suggest that the banking community is doing anything less than the best they can do, given the circumstances they've been handed.
No, that's a great point. I think actually banking community has reacted very fast, and especially like we're dealing with unprecedented volume too. And so in addition to the fact actually that lenders are dealing with the forbearance issue, they're also dealing with many cases just like a volume that's happening at a breakneck speed. Not
to cut you off, but not just volume. Think about this: add record volume, add hedge risk, add mortgage-backed securities moving rapidly in a volatile environment, add having to transition to work from home, and throw this in there. And when you really think about it, what they're doing is incredibly impressive, all things be considered. So that's, to me, one of the most unfortunate things is if there's anyone that lands in a headline of a paper for not being responsive to a consumer for a forbearance need, it seems to me patently unfair given what the circumstances are.
And I know we have some questions that are starting to build up, but I mean, one thing I want to ask you, because this is just something like and there are some lenders that have taken a pause, and it's fair to say actually that those lenders taking a pause is not even an indicator of their financial stability. It's just in some cases just a fiscally smart thing to do. I mean, would you agree with that statement?
Yeah, we talked about this on Monday in Anthony's show. People are making all kinds of decisions as to what they want to lend on, what they don't want to lend, what kind of capital they want to preserve. And a lot of that has to do with the models they're running. And based on their models, and to your point, if they're running a worst case scenario and they don't feel like certain relief is coming, or if they don't believe the forbearance for all is going to change to a smaller pool by showing some kind of hardship, then how can you blame someone for preserving capital and saying, look, until we know what this is, we're going to sit on the sideline? It doesn't mean they're in trouble. Now, do you want to call them conservative? Do you want to say they're missing an opportunity? Do you want to say, well, wait a second, you're cutting back at a time when we still have borrowers that are in need? And you could say that those are all true. But what you can't say is that they're in fiscal disrepair or they're in trouble. And that's part of the problem with private companies is any move a private company makes, it is so easy to just jump on the rumor mill and suggest that they have some fiscal hardship. And the truth is, any company that doesn't say, given what we know about record volume, to your point, and knowing about margin calls and hedging pipelines and knowing about MSR changes and knowing about forbearance, there is liquidity issues regardless. It's not debatable. Now, whether some people want to say they're arguing too soon or they're bringing it up and they're trying to forecast out and they're crying too early, look, you can certainly debate that point. When are you supposed to cry out? Look, I don't know there's a perfect time, because if you do it too early, someone can say you're the boy who cried wolf. You do it too late, well, there's nothing you can do about it anymore. And so when you get into these positions of people being more defensive than others, or some saying, no, this is an opportunity. Well, the truth is some that may take the offensive may be people that were lagging before and weren't succeeding as well. And so to them, it's an opportunity. And they will say, hey, look, I jumped in when others were backing out. And that doesn't make them wrong either. An opportunist isn't necessarily a negative word. Some people sometimes say being an opportunist is some kind of negative word, but taking an opportunity as you see fit is your choice, which again, we get back to, that's what free market is. Some will go offensive, some will be defensive, but we're living in a time right now where free market and controlled markets are collapsing into each other. And that's part of the problem, is we're trying to run them both at the same time and they don't mesh very well.
No. So we're talking about free markets and kind of almost like quasi-free markets. So what happens with private labeled securities? So we have actually, we're talking about forbearance, and obviously if it's a government loan, there is relief for them, for Fannie, Freddie. There's hopefully going to be something in place. But what about actually private labeled security? What about, non-QM loans? There's nothing really for them, right?
Yeah, I mean, for the people that think that the government and Fannie and Freddie should be privatized, this may make you think twice right about now, right? For the people that don't get what happens, private money gets defensive very quick. I mean, to see how fast, we have some good friends in the non-QM space and some great people. And between repo lines and exit strategy and PLS money, they lost all kinds of opportunities overnight. And that shows you people who have the opportunity in free market to deploy capital are going to choose. And if they, for whatever reason, run scared and that capital dries up overnight, that's what free market is, unfortunately. And so that is an example of why when people talk about Fannie and Freddie and the government, and people say, we don't need the government for this or that. The truth is, there are certain things where the government provides stability, and it's essential. Now, that being said, does the government also need the private enterprise to work with them and have a mutual understanding and respect? So when things like this happen, they find solutions that are for the betterment of all? No question. But there are times when we need the Fed window. There are times when there are certain things that banks just can't do, or certainly private banks can't do. And so, to me, the private label security market. Just look at, even high balance. Even government. Look at Fannie Freddie high bail loans. Things that trade in special pools, they just don't do well in times of disruption. When there's uncertainty about the performance of a bond, it is hard, and especially with big institutional buyers, they just aren't going to buy bonds that they don't know how they're going to perform. And so private bonds are the first to get trashed. And we saw it almost overnight, and it stinks. It's, were they really risky loans? No, I don't believe so. Were they riskier than an agency loan? Depends. In some respects, you could argue based on, the certain requirements, sometimes they're better loans. But fundamentally, because they're newer loans and the performance is not to be known, and because the forbearance or the states could get involved, it was hard to know how they perform. And so when you get into an asset class that people can't understand performance, can you blame a bondholder for not buying it? And so unfortunately, uncertainty is the worst thing in the world when it comes to investment class. Yeah. And for the moment, we need to, and to be clear, even with uncertainty, look at agency loans. We talk about forbearance. What we don't know is after forbearance, are these people going to pay? And say these people, that includes you, me, or anyone for that matter. Yeah. Someone lost their job and they wait 6 to 9, let's say 6 months of forbearance. They obviously can't come current. Let's be realistic. If you haven't paid for 6 months, you're not writing a check on the 7th month for all 6 months. So you're going to need some kind of modification, or you're going to need some kind of extend, and you're going to need some kind of secretary lien or what have you. And then let's say you get current after that. or are you not? Or does that mean at that point you say, you know what, I can't even afford this payment. I haven't got my job yet. And so the hardest piece is once you get beyond the cash advances, once you get on the fact that maybe we need liquidity for the cash advances, the question still ultimately is, what is this asset worth and how's it going to perform from a payment strip beyond the forbearance? What's going to happen after the fact? And are they going to then pay? Because remember, when you're buying a servicing strip, you're paying for an expected time period, 4, 5, 6, 8 years of historical studies of based on interest rates and job loss in the economy, how much cash flow you'll receive from the servicing strip. If people want a forbearance immediately and then never pay again, you didn't just have the cash advance issue, you've lost much more than that because you lost the asset that you paid for. And so you have this modeling issue now that we don't know in this environment. Now, theoretically, the job, assuming we get a nice healthy recovery and people get their jobs back fairly quickly, the housing values should hold up because housing supply is low. Mm-hmm. And this should be an asset people should fight for, as opposed to 2007, people who bought houses as a stock and the values dropped, they didn't even want to fight for them. And so there's certainly a better hope, but it's still hope. There's still, the studies would suggest that people going to forbearance don't come out so great on the other side. The hope this time is that's going to be different. But again, it's an untested hope. And when you get into untested hope, paying out money and your private capital for an untested hope is a lot to ask of somebody.
Yeah. So want to go to some of the questions from the room. Hope we can get a little lighter here.
Well, that makes me nervous. Oh dear.
All right. So this is from Melissa from my team. A great job explaining such information to digest. Who would you suggest suffers the most from the gridlock being caused by the forbearance?
Well, I think clearly look, there's a lot of people that suffer, but clearly anyone that has a big servicing book, anyone that has a large servicing book, because in theory, you could choose not to fund loans today if you didn't want to. If you are so afraid of forbearance, to your point earlier, you could just be defensive and say, you know what, I verified your job even on the final day, but I just don't know about this job. I don't know about this company. I don't know about this industry. I'm just not going to fund loans today. So you could walk away from this. Now, then you would argue the consumer gets hurt because now the consumer, let's say they were looking for an opportunity to refinance, they get hurt badly because they've missed an opportunity to get a lower rate. If you were selling a house in the middle of a transaction, they get hurt. No. So it depends how you look at it. Just from the chain, everybody gets hurt. But the real issue is if you were a servicer all this time and you have a huge book of assets that you expected performance on, and you expect a certain level of delinquency, it's going to be hard enough just the fact that your delinquency is going to be higher now because of this. But the forbearance piece, again, it just shrinks it in such an impossible window. It takes what would be probably 2-3 years of forbearance and lets you work it out with each one, spend enough time with each consumer, help them maybe with some counseling. It's just going to be such a huge number in such a short window that they just can't plan for it effectively. And so now that being said, private capital, you look at what Penny Mac did recently with their, with the agreement they had with private capital to help fund advances. Companies will figure their way out and then the free market will get involved, but it's still going to cause contagion. And the truth is it's going to impact pricing because people are going to take some of these losses and this impairment and they're going to even put it onto new loans because fundamentally their profitability is going to be so impacted that it's going to be irresponsible to think that their new levels of profitability won't be impacted, meaning what they were going to make X for in a loan, because the previous book is going to be worth Y now, you have to presume they're going to try to make more than X moving forward for a period of time to gain their footing back and to continue to preserve needed capital. So you could argue, look, everybody gets hurt. The consumers get hurt because some of them probably didn't need it, but they asked for it. Servicers get hurt. Loan officers get hurt. It doesn't spare anybody. But I think for the moment, the most immediate concern is for independent banks that are servicers because they as responsible as they are and how well they hedge their portfolio, you can't hedge for forbearance for all. And so I think that's where most people are really feeling that they need the most help because all they did was responsibly do loans for the agencies and try to service adequately and effectively and model properly, and were given a disruption that they could not have forecasted.
Yeah. So I'm just going to add this commentary that Christine Beckwith added. There's reality. It can't be falsely optimistic either. Where we talked about the doomsday scenario. No, a lot of people aren't helping people that way either. So I mean, yeah, like listen, we do need to be a realist. Talk about actually, the ugliness of it, and I think it's important to share that ugliness of the stories, so as a means of, this is why you need to consider your options and know what you're doing. Don't just call your lender saying, yeah, I'll take one of those free lunches, because it's not a free lunch. You need to understand your options. I got to say, like we talked about Anthony Casa and AIM before. They came out with some great resources to help originators, all originators, take that, whether I don't care what kind of originator you are, whether you're a retail originator, there's some good materials. Even if you're going to take that stuff and copy it, so you don't actually have the association on there. If you're not a broker, there's some great resources out there that AIM is providing. So that's.
No, Anthony has worked. Look, Anthony has worked tirelessly. He has different text groups he works with. He's working with leaders on all channels. I mean, again, to his credit, I think he's looking beyond just the brokers for the moment. He's looking, again, while he's a big champion of the brokers and certainly has been great for them, I think in this case, he is truly trying to be an industry leader globally. And he's getting other people involved, and he's sharing great information. And I think he's trying to teach the origination community to have, I think, a better understanding and respect for when people make these changes. They're not intended to be draconian. And it's not all about self-preservation, so we can still make a buck. The truth is, look, lenders they're gonna see fiscal pain no matter what they do in this situation.
Yeah.
They do have a responsibility. Again, without knowing how to model things out, they have a responsibility. They can't have it both ways. We have people saying, well, they don't have enough capital, and then if that's the case, well, then they have to hold on to their capital, because they have to say, no, we have plenty of capital. But what does that mean if you have plenty of capital? It means not deploying capital for other things. And so it puts them in a tough spot, because they're kind of damned if they do, damned if they do. I mean, damned if they don't. If they get aggressive at a time like this, they'll say, why weren't you slowing down? And then if you slow down, they say, why aren't you thinking of the consumers? Why aren't you continuing to lend and help them with these lower rates for the people that haven't lost their job? Because, as pessimistic as people want to be clear, and I think, people like Barry do a great job of this, is as bad as unemployment is going to get, 80% of the people are employed. And while some of them may still live paycheck to paycheck, and it's still a grind, but many of them could still make their payment. And so there's still plenty of people that can afford their house. And the truth is, housing supply is still low, and there are people that still want a house, and housing formations are going to continue to grow. And so it's kind of it's hard, because you can be both optimistic and pessimistic at the same time, which really to me is just a healthy blend of realism. It's both.
Yeah.
There's some few things that just need to still happen to kind of find better footing and allow people to model responsibly. But for the moment, the models are real difficult to do.
Yeah, and listen, now, long term, does this impact like the way bondholders or bond investors are going to look at mortgage-backed securities? I mean, is that because like you look at actually like a GM or 3M, they're probably not going to get a bailout. There's nothing that's called into question as far as the payments that are going to go to their bondholders. So like does this create like a little bit of daylight between bonds with mortgage-backed securities and other bonds that don't have this kind of like government intervention?
Yeah, I mean, that's a great question. I mean, I think some of that depends on your viewpoint about how 1 in a million this pandemic is, right? I mean, you have different schools of thought out there. You have some that think this is going to now be a new normal every 10 years. You have some that think this is a one-time event. You think now that we've been through it, we will be better next time. Perhaps maybe this time around, if it happened again, the difference is the government response would be different because they learned from the past. So look, I think all things for a period of time will be impacted. Everyone will consider their risk model, and they may retain, they may have a reserve that's a little bit wider. People will maybe, anytime this happens, you always get to a defensive mode where preservation of capital becomes, the cash is king becomes, which has never gone away, but it becomes a little more true at times like this. And so do you think there'll be some contagion in terms of bonds across the board, particularly, private bonds? Look, the answer is probably yes. But again, that really even look at this now. You have people out there that say, look, I don't understand this. I'd go to a baseball game tomorrow in front of 30,000 people and wouldn't wear a face mask. there are people that don't believe this is and again, look, they're entitled to their opinion. I'm not here to judge. Everyone has different things. I'm not wearing a face mask right now while I'm talking to you, but there's also no one in my office. So I think I'm okay in case anyone complains. But private capital is tricky because people will believe what they want to believe about, in the end, the safe and soundness of the bond and the performance. And I suspect it will, there'll be some contagion for a period of time, but I don't know that it lasts. The only good news when things like this happen is we tend to get better at it. But there's certain things in response time you learn from doing. And I suspect that this should happen again. Forbearance for all may be out the window next time. They may look at this and say, okay, that didn't work as well as we wanted. Good intentions. We probably could have been more pinpointed about our resolve here. Yeah.
So let's find something good to talk about. Is there anything from all this? Do you feel actually that there are lessons that we've learned? Like you said, okay, I think the government's going to learn that they're not going to do a blanket select all forbearance all option again. But what are some other positive things? Like listen, you guys are right now all working remotely, other than a couple of the key people at PRMG. How's productivity been for the organization overall?
Yeah, look, when you talk about positive, that is probably one of them. I will tell you, especially as you know, in California, some of these commutes can be dastardly. And so it is interesting that you could argue some people feel they're more productive because they're not in their car. They're at their home. The world is certainly getting more flat. On the flip side, when you're dealing with challenging times, some people like to be together because there's something about comfort in numbers. And so it's kind of a mixed bag. So to your point, look, do I think it's great that companies, and in many companies across this country, and there are many great lenders that have transitioned to home and have funded all these loans and have broken records in March, and I think it's impressive. So that is a bright line. But you also can't ignore the fact that what you want in a company is camaraderie and a closeness and a family feel. And you can lose that if you're not careful when you get some of this, Skype can only go so far. And so while the question will be is that people say, wow, this is great for us. Well, look, if you're a real estate owner, you may not love this as much because you may say, okay, these guys just proved they don't need commercial buildings. So, the problem is for any point of optimism, it's like if you go back to the 30s, pin setting. If you were a pin setter at a bowling alley, did you like the fact they figured out how to do it in an automated fashion? Maybe not. I guess you find a different job. So is this a moment in time where we realize that mortgage lenders can take less real estate and still be effective and nimble? I think it's proven that point to some degree, but you still also have to make sure that when the going gets tough and lenders are working together, and in this case, I would say the other real point, I guess, to your optimism is I think we've seen a lot of lenders work together. Competitors that are often competitors, we've seen a lot of people kind of share good information, try to find the collective good, try to kind of work, you want to be careful because you don't want to say work together in like a collusion kind of way. But say, hey, look, we're thinking about doing this. Is that going to look too defensive? Is that going to be aggressive? What are you doing? How do we find an answer that supports the originator, the broker community, the loan officer, but also, again, shows the government and everybody else that we're committed to, intelligent lending and have been, but they threw us a curveball, and how do we work through it? And it's tricky. So I do think, to your point, that there is some optimism there. Anthony and I talked about it in his show. I think the originator is learning things they've never really knew or cared about before, or maybe they cared, they just didn't know, or maybe no one took the time to teach them. And so I do think there's a crash course in education. Yeah. I think there's a better understanding from both sides of the aisle that I think help. And we're hoping that, quite frankly, that this time around, as the government works with the MBA and other lenders, that there's a better basis of trust that says, look, we're not saying this because it's for our best interest. We're saying it's because it's for everyone's best interest, including the consumer. And you don't want to label the insider as automatically self-serving or a protectionist of profits when they're really saying is, look, we want what you want, but there's a better way. And because we're the expert, can you let us help you find the better way and show you that it's in their best interest and yours as well. And it takes time. And no one, in theory, you would do some kind of pre-mortem and play one of these out. And that's the problem with crisis management. Do we ever really play one out and do a fake pandemic? And the truth is, if we had, we probably would have a better response this time. But the truth is, no one really does. And so people make knee-jerk reactions, and they're tricky because they're not that well thought out, but certainly well intended.
Yeah. So we got another message from one of my team members here. What lessons do you hope lenders and borrowers take away from the effects this pandemic has had on the mortgage market? As a mortgage professional, what have you taken away from this experience?
Yeah, that's a good question. I mean, look, it's hard to say lesson because look, there are some loans that now all of a sudden, like you look at some of these DPAs, down payment assistance programs, where a servicer said, hey, you know what? If they call about a forbearance in the first 40 days, we're not going to buy the loan. And then you say, okay, but if you don't buy the loan, that means you didn't reimburse the down payment, which means we made the down payment, which means now you have an FHA uninsurable loan. Like you have these things that create these crazy consequences. And it's tricky because a customer doesn't know and they probably don't care. And if you're an originator and a mortgage professional and you've done your care to give them a quality loan, it's hard to explain it to them. So it looks like kind of, hey, the big bag bank is just going to run and hide. And the truth is there's an intelligent answer to why they can't do it. They can't take on the liability. And again, it's not profitability. It's the difference between having a loan that, quite frankly, you can't even sell to the government, nor could they get the insurance. And so there's so many examples like that where people are truly, I think, making a responsible decision. But it's tough to explain it, and sure as heck hard to explain to a consumer. And so the worst thing in the world, I mean, think about it. Think of kids that are high school seniors that played baseball or a spring athlete, and they've lost in 1 month, they've lost their baseball season. They've lost maybe their last chance to play for college for a scholarship. They've lost their prom. They've lost their graduation. Like, how do you explain that? And I have a nephew that's in that exact same situation, and he's miserable. And what is his father to tell him and mother? It's a tough spot. And so sometimes I wish I could say there's some great lesson. Sometimes there isn't a great lesson. Now, in this case, what I would take away from this is, and I've said it all along, I've always been frustrated with, and I've served on a few different boards, and I've been lucky enough to serve on some public-private opportunities where the government and private citizens work together to both fundraise and build an organization and run it together in concert. And I think they're wonderful. And I think this is just another example of when you talk about private capital and you talk about the government and you talk about lobbyists, the truth is they all get sometimes the blame for certain things. They sometimes get too much blame and sometimes they get too much credit. And the truth is everybody needs each other. The system works when the government, look, we are a socialized democracy. People, if they want to be far left and far right, look, that's their choice. Look, this is not a political show and I don't know, sometimes I don't even know where I am anymore. But what I do know is there's almost never a time when you don't need government assistance and that your taxpayer dollars don't go to good work. And there's almost never a time where you don't need private capital. And there's almost never a time where you don't need consumers to understand and say, you know what, this stinks, but I get it. And you know what, it's out of my hands and I'm going to make the best of it. And I'm going to make lemonade out of these lemons. And it's tricky. And so there's shrapnel across the board when something like this happens. And again, all this doesn't, unfortunately, none of this takes a front seat to the fact that people are sick and the healthcare industry is struggling to the dickens and there are loved ones dying across the country. And now we're spending, you look at these commissions, this is no time for the blame game. This is a time for resolution and a time for someone, unfortunately, working tirelessly and hours on end to say, look, I got to trust each other a little bit. I got to find who within each group. Because like anything, whether it's government or private capital or citizens, there is going to be some, to your example, there's going to be the person that hoards no matter what you do. You could beg, you can plead, they'll find a way. They'll even steal it. They'll break in at 3 a.m. and take the toilet paper. There are unfortunately bad eggs in any one of our industries, whether it's the government, whether it's private capital, whether it's the banks that are supporting the private lenders, whether it's the originators. There are originators now that probably unfortunately will commit fraud to get a loan through the system. That's just the reality. There's going to be bad eggs everywhere we go. And our job is to certainly encourage the best behavior and explain why ultimately the best behavior wins out. Because the people that don't engage in the best behavior are going to make it worse for the people that are trying to do the right thing. And I don't, to me, that the lesson always is private public partnerships have to trust each other and have to find people that are doing it with the right intentions and aren't self-serving and trying to only create their own glory. And it's hard because people are naturally, I think, suspicious to some degree, and crises sometimes either bring out the best or the worst in people. And unfortunately, there's a little bit of blind faith. You got to trust somebody, and it's been a lot of work. And again, I think though each day there's a little bit of progress, but it never moves as fast. Speed of business is just the speed of business now is so fast, and news cycles are so quick that there's no luxury to take the time to think sometimes a long, well thought out plan. And so, the people that are doing knee-jerk reactions, you get frustrated, but you also say, well, it's better than doing nothing, I guess. And so, we battle between is a little better the enemy of perfection, or, if we wait for perfection, it's too slow. So where do we find somewhere between a little better than nothing, but not perfection? And it's a hard line to find.
Yeah. Well, Gary, listen, thank you so much for taking the time. I don't know. I just looked at the clock. We've been talking for 50 minutes here. So, I really just a wealth of.
I'll apologize in advance for that, I guess.
What's that?
I guess I'll apologize for that then, I guess.
No. Great information. Some really, really just great points here. So just I thank you. I mean, listen, I can't imagine how many hours are you working a day these days?
That's actually, it's funny. We just talked about this. It's a great example of a catch-22. If I tell you I'm working 22 hours a day, then everyone says, oh my goodness, what's wrong with PRMG? They're in trouble. Why does he have to work 22 hours a day? If I tell you I'm not working 22 hours a day, then they're like, why the hell doesn't he care? Why isn't he working harder for us? And so again, that is literally a perfect example of the catch-22 we live in right now. Is whatever you do, some people are going to want to paint it as incorrect. And that is it. So the short answer I will tell you is I'm working very hard. I'm working many hours. I have not even watched episode 4 of my own son's show. So that shows you what has lost. I will watch it Friday night. The good news is, market close early today, Good Friday tomorrow, for me, Passover. So, it is interesting, but it's just a great example of people don't know what to do because KP does these great videos and they're awesome. And I sometimes, I spend a lot of time with KP and I love him. But we actually had to talk about that because he posted one at 3 a.m. and we're like, well, man, maybe people think, why are you at the office at 3 a.m.? And who knows, people may judge him for his own personal choices too. It's but yet his guy's out there fighting for the industry, fighting for everybody, trying to share, trying to educate, trying to find the best solution and working tirelessly, but yet there are people that will attack that too. And so it's whatever you do, if you were home in bed, they'd be like, why are you sleeping right now at a time like this? It's a fascinating time because I just don't know the right answer, but what I do know is, and again, as you know, I was around in 2007. I will never let someone say that we did not do all we can. That is, to me, the answer is always to err towards, I will do anything I can for anyone, anywhere. We take every phone call. And caring, unfortunately, is both stressful and actually takes more time. It is actually easier to not care. And caring comes with a price. And sometimes comes with some pain. And I think when you look at some of these lenders that make some decisions they make, I don't think there's enough empathy for them. We were one of the first that supported when PennyMac came out with their disclosure and said, hey, if we buy a loan and within 15 days it goes FB, everyone goes crazy. We're the first one to say, look, I know the math, I know the cycle, and you know what? I get why you did it and I respect it, but I have to now figure out what I'm going to do to react to that movement. That doesn't make me any less, caring. But the truth is, I can't ignore the fact they made a change. It doesn't make me angry about it. I actually respect the change they made, and I get why they did it. And in some way, you actually like it even more because what it does is it creates a microscope to the issue, and it actually puts a shining light on it and says, oh, now everyone understands why they did this. And hey, now we need to know what someone has to do to try to fix it. And so sometimes the bold move like that, what it does, even if it puts you out there in the negative light with some, which you really hope it does, especially if it's done for the right reason, is it brings attention to something and to all the people that can fix it. Because the truth is, the one thing we can't do is we can't fix it alone. There's a lot of people involved, and there's been a lot of lobbyists trying to explain. And I think the problem is, to your point earlier, working for the consumer and working for the loan officer, working for the broker community, working for our own originators, it is sadly at this time kind of a no-win situation. And that makes it sad, and it makes it a tireless job. And I'll just tell you, we are putting in a lot of hours, and I don't apologize for it. And I still feel like I'm fresh as a daisy. So
that's great. And just listen, by the way, in defense of you and in defense of especially KP, because anyone actually who's following Kevin Perennial on LinkedIn knows that he posts those videos all hours of the night. So if just because he's posting it now at 3 o'clock in the morning doesn't mean that 4 months ago he wasn't also posting at 3 in the morning, because that's just the way he is, the way the passion that you guys have. Listen, I've had a lot of love for PRMG. And I love actually how well you guys have executed all channels. I mean, I've got friends of mine actually that are on the PMG retail side, and they're just like diehard PRMG people, and obviously wholesale. I mean, you guys are one of the such leaders in wholesale, and I think so much of it is because of your transparency and your willingness to do this. Your willingness, to have actually like KP, continuously share the message, and I think actually that just speaks so much for the corporate culture of PRMG, and we thank you for being leaders during these crazy times.
Well, again, you'd like to think that education, communication, if nothing else, like I said, it hopefully creates some kind of mutual respect and empathy between all channels. And we've always said this: you need the agencies, you need the aggregators, you need private capital, you need warehouse line. Look, this works because the entire chain has to function, and any break in the chain is bad for all of us. That's the reality. And so having mutual respect and understanding for the whole chain helps everybody, because it creates a little more empathy, a little more understanding, and hopefully a little more air of compromise in a world where compromise lately is becoming kind of questioned as a breakdown of principles, as opposed to trying to meet in the middle. And I think that's been a challenge as well. And so, hopefully we can help. Like I said, I'm coming out of my shell a little bit. I think KP is better suited for these kind of things. This is my second in a week. And I'm going to say, in some respects, I will be happy to do them if people think they're valuable. And I feel like the feedback was mostly good from the first one I did, other than staring at the screen entirely too close. Just to position myself better. You can see the basketballs in the background now, not just my nose hairs. So I'm learning with each interview.
Let's get a nice wide angle so everyone can see actually what you've got going on there.
Yeah, so you can see my coaching career in full glory behind me.
Very cool. All right. That's it. I think we should definitely wrap this up before we get to an hour. So, Gary, again, thank you so much. And really, really appreciate everything you're doing. I can't believe I've watched episode 4 of the Plot Against America before you have. Yeah, go watch it. You're gonna love it.
And just remember, tell everyone HBO is free. Everyone who keeps telling me it's because they don't want to save the $9.99. I respect it. At a time like this, no one wants to spend money. HBO is free. You can watch it. It's free. Stream. They're on through 4. I will watch it Friday night, and we'll compare notes. I'm excited. Actually, 4 is, from all I know from watching filming in New York, 4 is actually the scenes that we enjoyed the most for him. They're the most challenging scenes, and so I'm personally excited to see it. And,
has it been renewed yet? I mean, is it publicly?
Only one show. It will never be renewed. It's a book, so it's a closed series. It was.
Oh no! Oh, it's so horrible.
Well, that's how they got everyone to do it, though. To be clear, this is another example of when people realize they wouldn't have gotten Winona Ryder and Zoe Kazan and John and all these people if this was a series. They couldn't have got them. So again, everything is both a blessing and a curse when people have to stop back and look. He is so lucky that it isn't a series, because he got to work with people he considers legends. You don't get Winona Ryder on that show if this is a 5 or 6 year series of all that she's got going on. And Zoe Morgan, every one of them, they got them because they said, look, this is going to be an intense 6 months, and then you're done. And that's how they created that cast.
Yep.
So we're fine with it being just 1 year, quite frankly.
Fantastic, and so much better while watching than the Tiger Show. So, all right, Gary, thank you so much for joining us, everyone. Thank you so much for joining us. We're really, really excited. So next week, got a couple of big players coming up. We got Carl White's going to be joining us. We got Barry Habib. During this time, I don't think we can get enough Barry Habib. I mean, Barry actually takes what's happening on the capital markets and breaks it down actually for the average individual loan officer, and shares actually in a way that information can be shared with your borrowers. So that's going to be happening. I believe Barry is on Monday or Tuesday. Carl White. Just check out the National Mortgage Professional Facebook page. Make sure you also get over to PRMG, show them some love. So we really appreciate it. That Gary, thanks a lot.
All right, thank you very much for having me. Appreciate it. Thank you.
All right, and once again, I'm Andrew Berman from National Mortgage Professional Magazine, Mortgage News Network. Thank you for so much for watching. Oh, that's right. It's Thursday. Tomorrow we have tomorrow. I'm just trying to remember who's on tomorrow. Oh my goodness, totally drawing a blank. Oh, that's right. Rick Sherga is going to be on tomorrow, who is going to be a great person to talk to about servicing. And thank you from my team. We got Barry on Monday and Carl White on Tuesday. And tomorrow, Rick Sherga, he was a top executive at Carrington. Before that, he was Realty Track. Just an expert when it comes to servicing, expert when it comes to foreclosures. He's going to be a great person to have to get some insights on what actually the impact on servicers for the forbearance plan. So thank you so much for joining us. We will see you guys tomorrow.